Welcome to the part 4 of the Yahoo Finance video tutorial series. Let's pick up where we left off from last week. The price to sales ratio for Meta platforms is currently at 8.46. So the price to sales ratio is the current stock price divided by sales per share. Let me give you some examples. If the price to sales ratio is 8.46, then you're paying $8.46 for every dollar of sales the company makes. For the trailing 12 months, and I'm going to round some of these numbers up to make things simple, Meta platforms made $112 billion in total revenue, and they have 2.78 billion outstanding shares. The current stock price when I took this screenshot is $334.20. So first, you're going to divide $112 billion in revenue by 2.78 billion in shares outstanding, which comes out to about 40.29, and that's the trailing 12 months sales per share. Then I'm going to divide a current sales price of $334.20 by 40.29, and that gives you 8.29 for the price to sales ratio. A low ratio could imply the stock is undervalued. It probably doesn't make sense for you to compare Meta's price to sales ratio to a company in a different industry. I can compare Meta's price to sales ratio to other companies like Snapchat, and their price to sales ratio is at 21. And Twitter's price to sales ratio is at 7. Keep in mind that the price to sales ratio doesn't take companies' earnings into account or if they will ever make earnings. Again, I'm showing you how to calculate these numbers so you can do your due diligence researching stocks. Do not just rely on Yahoo Finance, but actually visit the investor relations website and look at their quarterly and annual earnings reports. I like looking at the price to sales ratio, especially when the company is not profitable yet, and if that company has the potential growth in the future. So let's look at Uber, because that company is not making profits at the moment. Their diluted EPS is showing negative 1.29, so you don't see the trailing PE. Instead, I look at the price to sales ratio at 4.59, which means if I buy the stock today, then I will be paying $4.59 for every dollar of sales Uber makes. Again, in order to calculate the company's price to sales ratio, you're going to need the following data: the company's total shares outstanding, trailing 12 months revenue, and the current stock price. Uber's trailing 12 months revenue is $14.8 billion, and it has 1.94 billion outstanding shares. So I'm going to divide $14.8 billion in revenue by 1.94 billion shares, and that gives me about 7.63 sales per share. I'm going to divide $41.97 in share price by 7.63, and that gives me 5.5 in price to sales ratio. Uber's price to sales ratio at 5 seems low, but then again, it doesn't account for Uber's balance sheet. When you value a stock, you got to take a lot of things into consideration, but the price to sales ratio is a great way to start. So you got to ask yourself how much you're willing to pay per dollar of sales. So with that said, I appreciate you watching my video, and don't forget to check out these two stock market videos as well as the new fire video coming out on Friday. Have a good one.